Hello, folks. Taylor Johnson here. I wanted to give you a look at the December 2024 real estate statistics for the DC market, DC regional area. And one thing that I noticed big time here is there's a normal seasonality in the cycle of sales, and that is very evident in the numbers that we're going to look at here. You'll see that closed sales at 3,858 were up 26% over last year, and they are also up over November, but they are only about 2% higher for the year 2024 versus 2023. So 2024 was actually a pretty slow year with only a 2% increase in total sales for the year. The median price at $590 for December of 2024 is up over December of 2023, but it is about 10,000 lower than what it was in November of 2024. Days on market, as you can see, has gone up, and we'll take a closer look at that for all local markets in a minute. Pending sales are up this year, year over year, but they are down from what they were in November. And it is normal that we see a little bit of a decline in December. As I mentioned, we've got some seasonality here. So that is, I think, part of what we're seeing there. We also see that new listings are down over last year, and they are a little bit higher than they were in November, which is interesting. But they are actually at the lowest level that they've been in 20 years. So we are continuing our streak of shortage in the market. Active listings, as you can see, are up a little over 15%. But they are down number-wise over what they were in November. So that means that the inventory is a little tighter in December than it was in November. And we can see that also in the months of supply, where it is now 1.3, which is actually a very slight increase over last December, but it's actually a decrease from November of this year, which was at 1.6. So again, the inventory in November is tighter because there are fewer homes coming on the market. The good news, I would say, is that showings are up. So for sellers particularly, they want to know that they're going to have more eyes on their property, and we are seeing that. I think that's also a good thing for buyers, even though it potentially means more competition. Having more showings is encouraging to buyers, and so, to sellers. So if we get more sellers, then we're going to have more inventory and more choice for buyers. So I think we really want to see the showings increase. And I just wanted to point out to you again, seasonality-wise, even though these are up over December at 56,000 showings over what we had last December, they are down 20,000 from November of this year. There were 76,000 showings in November. Again, some seasonality. People just don't go out during the holidays. They're not interested in moving and all that kind of stuff. A lot of this stuff we've already covered. Bit of a surge, buyer activity surge, rates, even though 0.75 percentage point lower than they were a year ago, buyers have adjusted expectations. They start acclimate to the new normal. I saw a prediction just today that the Bankers Mortgage Association and Fannie Mae both predict that rates will remain over 6% for the coming year. Price is still strong in the DMV area, and this creates some affordability issues for a lot of people. And we particularly see that single-family detached homes are rising much faster than townhomes or condos. And in fact, many condos that I have had my clients look at, we've been able to buy at a price below where the seller paid for it, which is not necessarily a good trend for condos. But I think a lot has to do with how many new condos are coming on the market, and they are kind of suppressing the whole overall inventory or price range. Inventory overall is still quite low, and we'll take a look further. So in the median sale price graph here, I want you to take a look at this low line here is 2019, 2020, 2021, 2022, 2023, 2024, right? So the median sales price just keeps going up. And if you look over here, it's almost $150,000 gap from 2019 to 2024. If you're a person who's sitting on the sidelines waiting for prices to come down, this should be pretty clear that that's not going to happen. As we've talked about, and I'll show you again in a minute, the inventory is really low, but the demand is high. And so that's going to continue to push prices up. And I've seen many forecasts from economists and others that predict that situation, that imbalance of supply and demand to continue for the next 8 to 10 years. So get in the market and capture this appreciation. Obviously, looking at this graph, you wish you'd bought 5 years ago. So buy now, so that 5 years from now you can say, oh, I'm glad I bought 5 years ago. Median days on the market, you can see here, there's a seasonality issue. Here we are right at the end of 2021. Here we are right at the end of 2022. Here we are right at the end of 2023. And here we are right at the end of 2024. We have a high number of days on market, and then that plummets into the spring. All right, so I would anticipate we're going to see the same thing. If you are thinking about getting into the market as a buyer, right now is a good time to get in because homes are still sitting there a little bit longer. It gives you more time to look. It gives you more time to think, potentially even gives you opportunity to negotiate better terms. When we're down in this trough where homes are selling very, very quickly, there's very little opportunity to do any negotiation, and homes sometimes are basically going before you even think about whether or not you want to have a look at it. All right, so as a potential buyer, now is a great time to get into the market if you can. As a potential seller, now is a great time to begin preparing your home to go on the market in the next month or two, when you can see that the number of days on market is going to decrease dramatically if we follow the normal pattern, and that will be a great time to be entering the market. Okay, so active listings. I wanted to show you, where is it? Active listings here. Look at this graph for active listings. We're right around just a little bit over 5,000 active listings currently. But look here, in 2019, we were at 12,000. We have a 7,000 homes decrease in active listings. So again, as I've mentioned multiple times in these reports over the months, we have an crazy shortage in the number of homes for sale. And I think this is dramatically represented here. Even though this is at 5,000, it's at least half of what it was at the beginning of 2019, and even less than that at the peak of 2019. Okay, so just something to be aware of if you are a potential buyer. You are entering this market that's difficult. It's a challenge, but it also means, as a potential buyer, once you have a home, you're potentially going to see this continued increase in median sales price, so that year over year you're going to see significant appreciation, particularly if you're in a detached single-family home. It is a little less than for townhomes, and it is not so apparent for condominiums. Okay. Active listings, again, we did that. And showings, I would like to say, are mostly up. So that's good. Here we can see median days on market all across the region are a little higher than they have been in the past. DC is almost a month and a half, which is crazy. Loudoun County is and Fairfax City, well, let's not count Fairfax City with only 20 listings. It doesn't count. So this is a seasonal thing. Let's look at it in a different way. Months of supply. You can see here that DC is at 3.6. We were up around, we were bumping up against 5 a month or two ago. And all of the suburbs around DC are hovering around 1. Again, we're going to exclude Falls Church City. That's 23 units. It's too small a number. So the inventory is very, very tight, except in DC. Even in DC, though, it's relatively tight. And I can see here that showings across the board are up, but new listings and pending sales are all numbers that, again, compared to last year, we're in a better situation, but compared to last month or compared a year as a whole, the market's been relatively flat-ish with just a slight increase. All right, active listings is the biggest thing. Again, this shows that right now there is a little more to choose from for each individual person. However, again, on a bigger scheme, the total number of listings compared to what we had even just 5 years ago is about half, and compared to what it was 10 or 15 years ago, it's only maybe even a quarter of what that was. So the inventory is extremely tight. If you are a potential buyer or a potential seller and you'd like to talk with me a little bit more about the market and how I might help position you appropriately for the best opportunities, please reach out to me. My name is Taylor Johnson. I am a realtor with Keller Williams Capital Properties. If you like this video, please click on the button below so it helps other people find it, and subscribe to my channel. Thanks very much for your time. Have a wonderful day. Bye now.